If you're still struggling to make money trading, even after learning every pattern and indicator under the sun, this might be the video that changes everything for you. Before we jump in, a quick but important disclaimer. I'm not a financial advisor and this is not financial advice. Trading carries risk and you can lose all your capital. Remember, only ever invest money you're comfortable with losing. Make sure you stick around to the end because I've got a free resource that will help fast track your trading progress. So let me be completely real with you. It actually took me less than 3 months to become consistently profitable once I made one key shift. I stopped obsessing over technical analysis and instead focused on understanding macroeconomics and fundamental analysis. Now, most struggling traders think the secret is just finding the right pattern, the right indicator, or the perfect strategy. But I'm here to tell you that if you're ignoring fundamentals, you're leaving 80% of the edge on the table. Now here's the issue. Most people are overloading on technicals. They spend all their time learning trend lines, flags, Fibonacci's, candlestick formations, but then price blows through their level and they're sitting there wondering what just happened. What happened is this: you didn't know what was going on in the real world. Now markets move because of economic expectations, news events, interest rate changes, inflation, risk sentiment, not just because an RSI hit 30. So when I began studying macro and fundamental factors, my entire outlook on the market completely changed. I started asking, what's driving this pair or asset? What's the current market sentiment? Are central banks dovish or hawkish right now? What's the market expecting and how can I position myself around that? So let's take gold for example, one of my favorite assets. If inflation numbers are rising and there's global uncertainty, what happens? Smart money moves to safe haven assets like gold. Now let's say CPI, which is the consumer price index, is about to be released. If it comes out higher than expected, that could spike gold's price. Why? Because investors anticipate central banks might hold off on cutting rates. More uncertainty equals more demand for gold. So instead of reaching to a breakout, I'm already anticipating the move because I understand the story behind the chart. Now let's flip to US 30, another favorite of mine. Let's say the Fed signals they are planning to lower interest rates. What does that mean for the Dow Jones? Lower interest rate equals cheaper borrowing, equals more business growth, equals higher stock prices. So if I see the Fed making dovish comments or a soft inflation print, I'm looking for bullish setups on the Dow Jones. Even before the pattern forms, I already know the direction I want to trade, and that's the power of macroeconomics. What macro does is simple. It gives you technical context. I'm not saying don't use chart analysis. I still use price action, structure, and clean zones, but those levels only matter when they're aligned with the bigger picture. Without context, you're simply gambling. With macro understanding, you are planning. Listen, if you're spending hours trying to predict the market using just patterns, you're working backwards. The market doesn't move because of your chart. It moves because of real world data, central banks, and institutional behavior. The sooner you accept that, the sooner you will stop fighting against the trend. So what should you do right now? Number one, start tracking the economic calendar. Websites like Forex Factory or MyFXBook. My personal favorite is marketedge.ai. They show you the key events for the week and break down how they're going to affect the market. Number two, pick 1 or 2 assets and learn what drives them. For me, it's gold in US 30 and I know how they move around certain data releases. Number 3, start following central banks. What are the Fed saying? The ECB? Are they cutting rates or raising them? Are there any geopolitical or war tensions brewing? Number 4, check sentiment. Are we in risk on or risk off mode? Are traders chasing high returns with equities or are they hedging with safe haven assets like gold? That's the info you need before you start placing trades. One mistake I see all the time. People learn one strategy, it works for a while, and then it fails. And then they think they need a new strategy. But what they really need is a better understanding of the market's context. You do not need 10 strategies. You need one good strategy backed by real world logic. The biggest shift I ever made was going from what is this chart pattern doing to what is the market expecting and where is the opportunity within that expectation. That changed everything for me. It made me more selective, it made me more patient, and it made me more profitable. Now, if all of this sounds like a lot, don't worry. You don't have to figure this all out on your own. Check out a platform I use called marketedge.ai, which breaks down all the fundamentals and macroeconomics for me. The link is below this video. You can also take advantage of my free Telegram trading community, where trades are sent out daily. Trading signals rooted in macro and fundamental analysis, always on the right side of market sentiments. No fluff, no guessing, just clean setups with direction, entry, stop loss, and take profits. Plus, you'll get weekly insights from me to help you sharpen your edge and get clearer on how to actually grow as a trader. It's 100% free and the link to join is in the description. So to wrap this up, if you're stuck in a cycle of inconsistency, if your charts don't make sense anymore, if you've been trading for months or years with no real breakthrough, maybe the missing piece isn't your strategy, maybe it's your perspective. Because once you understand the why behind the move, everything becomes so much easier. Thanks for watching. Hit the like button if this helps. Subscribe to the channel for more no BS trading breakdowns. And as always, happy trading, and I'll see you in the next one.